The panel is understanding the optimism around security tokens. In the morning, you heard the venture capital panel. They didn't kind of buy the Kool-Aid, right? This conference gives you the balance. It's going to give you another viewpoint. And so we've kindly invited Mark Müller-Eberstein to come up on the stage and invite his audience, his panel, which is Andy Bromberg, Radoslav Albrecht, Charles Chang, Kavita Gupta, Mark Müller-Eberstein. But before you guys come on, I just want to share with you this. Mark Müller-Eberstein is an entrepreneur, angel investor, founder of AgTech Corporation, manager of Code X3 blockchain investor partnership. He wrote a book, The Trust Technology, blah, blah, blah. But the fun fact about him is one of the best. He owns the only DeLorean car repair shop north of California. Please welcome Mark Müller-Eberstein. What is that? And your panel. Please come up.
Yes. Yeah, apparently I have an interest in weird investments. So car dealerships, cloud computing. Coming from Seattle, apparently that makes me a little bit of weird, but it's the cloud capital of the world with Amazon and Microsoft. It has also a very strong focus on AI and what most people don't know, an interesting history on crypto and financial instruments, like the first IPO, who remembers Multicoin? Okay, came out of Seattle as well. With that, I would like to thank the crypto finance people for putting a fantastic conference together, and that no exception, the panel they have put together for you today is really spectacular. With that, I would like to go quickly around and give everybody an opportunity to talk about their background and see how much they bring about global perspectives in the security token security token space. But why don't you stop, Kavita?
Mark is very excited.
Yes, I'm super excited.
You got him nervous.
And it must be the panelist, I'm sure.
It's just me, but that's fine. Hi, my name is Kavita Gupta. Currently, I teach at Stanford. I'm teaching 2 classes. Beyond Bitcoin, which is deep blockchain technology, and the other one is early stage data inclusivity for AI. And up till July, I was leading Consensus Ventures, and that's my foray into investing into a lot of blockchain products and being very excited about the security tokens and assets.
My name is Charles Chang. I'm the Dean of the School of Finance at Fudan University, where I study behavioral economics. The impact of human psychology on financial decision-making. Also the founder and co-director of the FinTech Research Center at Fudan. And in my spare time, run a private equity fund called Performance Assets Management.
I'm Albrecht. I'm the founder and CEO of Bitbond. With Bitbond last year, we launched Europe's first security token offering that received approval by the regulator. We have registered our bond offering in Germany and received approval for our prospectus for a public offering and raised capital from over 1,200 retail investors. And since then, we have started to provide the technology that we created for our own security token offering, mainly for banks and other intermediaries that are now using our technology in order to tokenize primarily corporate bonds. We're working on a corporate bond issuance platform in the Philippines. We're working with a number of German banks to help them tokenize corporate bond issuances. And so, yeah, this is what we do. And I'm personally, of course, therefore, very excited about security tokens in general.
Hi everyone, I'm Andy Bromberg, co-founder and president of CoinList. As many of you heard an hour ago, we are the leading token sale platform in the world and also imminently launching a crypto exchange.
Thank you very much. And yeah, very impressive. So what I was trying to say, we heard today is security tokens have been going through the discussions, I think, today and yesterday. Is it the next big thing? Are we too early? I think we have a very mixed audience here at this event. We have a couple of people that are super familiar with all the details of crypto, but some of them are traditional investors. So I think we will start with what is the difference between a security token offering and a traditional IPO for a company? Who wants to take that first? Yes, please.
I can lead it off. Yeah, I think the terminology here is really challenging, and people use these words to mean different things. At CoinList and in my own parlance, when I talk about a security token, I'm talking about a token that is and forever will be a security. So a token perhaps that represents some sort of equity interest in the company or some parcel of real estate or something similar to that. And when you look at it that way, I think that a security token offering and an IPO could function in very similar ways. If the security token represents equity in a company and there's a sale of those tokens, is that any different than actually just offering the shares of the company publicly. I'm not sure it is. The tokens represent those shares. What I do think is challenging, though, is that in this space so far, most things that people have called security token offerings are for tokens that eventually intend to be non-securities. And to me, that's not a security token offering. So a security token offering is just an offering of a token that represents a security and forever will be a security. And in that sense, you can do with it all the same things that you could do with any sort of kind of traditional security, but perhaps with the benefits of this blockchain technology attached to it.
So does make securities, the word security makes it more secure? Do we have to be as afraid as with the ICOs, or are there less scams around there?
Actually, I wanted to add something what Andy said. I think it's also about collateral. It's like more than security token, it's about collateralization. What do you have? I remember when IFC launched Swap, the same SEC conversation started like, what are swaps? And like, are they just going to be another type of exotic options which is going to be high risk? But anything where you have a security which is collateral underneath, tangible or intangible, but has some asset value, which is you can have a valuation on it, is what a securitized product would say. So whether it's an IPO or like a private equity Series A, Series B fund raise, where you have a collateralization of the equity, whether it's real estates, whether it's the financial systems for the cash flows for the supply chain, etc.
Right. I'll add the same thing. I think the reason why President Xi Jinping in China has had such a sort of rebirthing, a reawakening of his view on crypto is exactly that. That now we're talking about something that's asset-based rather than based on a business plan. Something that we know how to regulate in the large majority of the piece. It's an iteration on existing policy rather than the sort of landing of a completely new concept. So as we differentiate not from IPOs but from ICOs, I think that sort of is part of the reason why China is now so excited about getting into the crypto space, where it had been, I think, fairly tentative for the beginning part of that.
So as an investor, I can really look into what are the assets behind a specific token to have a much better understanding of my risk. Is that right? That's right.
And a very important aspect about that is that the rights of the investors are documented in a way, the way investors are already used to it, because securities obviously have been here for hundreds of years almost. And the documentation around a real security token that is a security is exactly the same as for other securities. Just like in the IPO example, you would have the same documentation. The only thing that changes is the technological platform on which the security is issued and through which proof of ownership happens in that security. And that obviously comes with a number of advantages that we're used to from the crypto world.
But are we going just securitizing what we have already securitized, like companies, or we talked about a building? Are there other ways to use that vehicle to provide the ability to provide some liquidity to assets that otherwise would have been locked?
Yeah, but I think what we are doing is fixing the short-term liquidity and the long-term liquidity in different cases, but also I think it is decentralization, like in the sense of when it comes to real estate, how much money do you need to buy one particular share of companies which are like at $5,000, $10,000, $15,000. So it is more like you can have a piece of it. So you can buy it for $2, $3, or whatever you want. So you can do that. So that solves a different case in respect to supply chain, but at the same time, for the supply chain cash flow, it provides a liquidity which does not exist, or if exists, it exists at a very high interest rate and to a very small group of people. So I think in every use case where we are digitalizing and providing a securitized asset or a token and putting it on an exchange, it is solving a problem. It is solving a big gap. And that's why people are very excited about it. Comparatively to utility tokens or the whole ICO craze, where some cases were very legitimate, but there was also a lot of fluff around it.
So, I mean, as a retail investor, I think it's great to be able to not only have to buy one Amazon share, can buy pieces of Amazon shares, right? So it opens up the ability to invest in specific companies for far more. But I hear a lot of excitement of unlocking the economic value of assets that have been closed off to the global market in the past? I mean, there's, of course, we talked about real estate before, but there's also there's countries like Namibia or Indonesia that are looking at all the non-access to the financial markets for their population so far, and they see that potentially as a vehicle to unlock that. Is that correct?
Well, we're looking at a lot of sort of alternative assets, and I don't want to misspeak. It's not that these things have never been securitized. In the go-go days, 06, 07, investment banks securitized all sorts of things. Artwork, watches, wine, and that isn't new. What I think is sort of the revolutionary bit is the access to those things. If you're talking about an art fund, you're talking about a $200,000 ticket price. And now you're talking about a $200 ticket price. But moreover, I think let's not forget that there are very real nascent reasons to use blockchain as a technology. Crypto aside, just the technology itself, the ability to nail down property rights. Again, that may not be something that's particularly revolutionary in America, but I can tell you it's not unusual to have a residential building have 200 owners in China. The ability to look at provenance in a really sort of defensible way for artwork. Once again, China has been at war in one way or another for 30 of the past 100 years. And who owns what, and is it real, is it not? I think the real, again, the original purpose and of validation and all of this that comes with blockchain is not to be forgotten as a real value, part of the value proposition.
You mentioned in real estate, the government has a strong interest in it, but I think, so government control, government regulations are key in those markets for sure. I mean, Ratko, I know you have done some work in the government regulation space, is that correct?
Yeah, so when we launched our tokenized bond last year, we approached the regulator with a legal and technological concept how this could be done, because before us there were over 130 other companies that wanted to do a tokenized security under German regulation, and they were all rejected by the regulator. And we approached them with a concept where we let them ask questions, and there was a lot of educational work to be done in order to launch a security token offering under the existing regulation. But since then, it has kicked off quite a substantial development. In September last year, the German government released their blockchain strategy, and one very core component of that is actually to change securities legislation so that electronic securities and digital securities are possible not just in the bond market but also for equities, which is one part that at least under EU prospectus regulation right now is not possible. So it has kicked off a development, and I think overall security tokens will have benefits in two areas. One area is what we just discussed, where there are new assets that so far have not been securitized. You have smaller denominations, so a wider group of investors has access to this. So there's one category. But the second one is the traditional capital markets that are already functioning today will simply become more efficient. And banks, especially in Europe, are suffering under very low margins. And I think if they can use modern technologies in order to increase the efficiency in the issuance of securities, then this is something that banks really appreciate. And this is one of the reasons why they're actually looking to use these new technologies.
So the collaboration with traditional finance institutions becomes really critical.
Yeah.
From your perspective and the background for consensus investments, does it really matter if you're looking at an STO game or an equity game?
With respect to investments?
Yes.
I think it does, because if there are certain companies, when you're doing equity investment in them at early stage, they're not going to directly, like in my experience, everything what I've seen so far, if they're going to do an STO, whether they're doing STO of their own company equity, or whether they are actually working on certain assets and then collateralize them and putting the security tokens out. So I think the security token investment directly would be more of a hedge fund game with the long term and short term. And I think as a VC investment, the companies who are going on to the STO game, it will still make sense to do equity investment in them. So one of the companies I sit on the board of is Dusk, Dusk Network, which is a regulated security exchange out of Amsterdam. One of the best security cryptography I've seen in my life among all the projects I have. And we went into the equity, like when I was personally doing it, it's not a consensus venture company, but I went with equity, and now they are doing securitized for the pre-IPO companies and Series C, Series D.
It's interesting when you look at it from a European perspective, but you are also having a very strong American perspective. Regulation, of course, is critical. So when you're talking with the desk management, how much do they have to think about the SEC conversations we just had to be an active global company, or do they decide just to ignore the United States?
I do have to go back to US. So I think Europe, in my personal opinion, is way ahead and more understanding of the regulations now than where we started from. And especially with respect to security token exchanges, Europe is way, way more supportive than what's happening in US. And Andy probably can share what his experience in US is, but I've worked closely with Dusk when they were getting their regulation documents and how, as an exchange, they would be able to get people, as you said, from Indonesia or Africa or Hong Kong to be able to buy those pre-IPO shares. And in every regulatory conversation, we found Europe way more supportive than when we try to have the similar conversation with SEC or CFTC. And just the criteria which they put with respect to where these tokens would be available for people to take, we felt that it was limiting and it was defying the whole purpose of actually going towards securitizing and putting the tokens out.
Yeah, I would, just to maybe go to the title of this panel, that understanding the optimism around security tokens, from my perspective and not representative of everyone else on stage, I'm actually relatively pessimistic on security tokens in the short to midterm, very optimistic in the long term. So understanding my optimism is a long-term optimism, and for me, the short to midterm is a pessimism. I actually think what Bitbond's done is amazing because it's one of so few examples that have been able to really raise a meaningful amount of money in a security token offering. And when we look at these deals at CoinList, the challenge that we always see with them is that although the fundamentals may be really strong, although the asset that is backing the token may be a really strong asset, although all the benefits that have been talked about up here on stage can be real benefits and can even enhance the value of that asset, the challenge that you always run into is helping investors understand that. And when you talk about, say, a tokenized piece of real estate, there are really two communities that could be investors in that asset. One is the community of existing real estate investors that might have bought that asset anyway, and now that it's tokenized, might be interested in buying it as well. And then separately, the community of crypto investors, people that are interested in tokens, and now we're seeing an opportunity perhaps to diversify into real estate. What we have seen so far in the space is that neither of those parties actually today want to invest in security tokens. Because for the traditional investor, they look at it and they say, we like this asset, but this token thing is too confusing. We don't want to deal with it. We don't get it. There's a million other assets out there in the world for us to buy, so we're going to go buy those instead, and maybe come back to us in 10 years when this whole security token thing is figured out better. And then the crypto community, although the diversification pitch is kind of intellectually interesting, right? You made a ton of money on your buying into the Ethereum crowd sale, and now you can diversify into real estate. Turns out they just don't want to. And what we see over and over again from crypto investors is they just want to keep buying into crypto products, pure crypto products, not asset-backed products. Or if they want to diversify, they'll do so by cashing out and handing it to a money manager and letting them manage their money. And so what we've seen so far, to sum that all up, is that the two parties that are potentially investing in security tokens, traditional investors in the underlying asset class and then new crypto investors, neither of them are interested right now, which makes it really challenging for these new tokens to launch, even if the fundamentals are strong. In the long term, I hope that will change, and I think there's good reason for it too, but we are not seeing that happen imminently.
I want to add something. I think when we talk about, for a lot of you guys who probably don't know the detailed technology or the concept out here, UNHCR recently did a small testing project. What they did was, people who know that in an year, 6 months, they have to leave their country and they have to move somewhere else. Already the prices have gone down for the real estate. Nobody, who's going to go to Syria and buy a house right now, right? So what they're trying to do is putting their legal rights to their properties, and especially that land, on securitized assets, and over time they actually want to put sort of like an MBS bond together and put it in the market on the digital exchange. So there are a lot of benefits of doing this on the ground, not only with respect to like a real estate transaction, but also an impact sort of a thing. And one thing which I felt is with respect to diversifying, as you were saying, my personal experience has been people in my community who are crypto holders felt like actually owning securitized assets, especially for the pre-IPO equities, is going to help them diversify from just having a lot of ICO tokens which they built up in 2018.
Kavita and Andy, both of you, I think, mentioned long-term focus. And I think Michael gave a great presentation about what happened in China. So maybe you can elaborate a little bit more on this, Charles. How is the Chinese perspective thinking about security tokens and tokens in general?
Well, I'll bounce off of what Andy said. I very much enjoyed your comment. But one particular thing you said, there's a million other things to invest in. And that, I think, is the key to understanding the China view on this. Because in China view, there simply aren't a million other things to invest in. Because of capital controls and a number of other issues, the lack of reform in the Chinese stock market. I'll share an interesting number with you. From 1990, which is when the reform began in China, the average GDP growth rate has been 9.98%. The average appreciation of the stock market, including cash dividends, has been 0. So for lack of other opportunities and the inability to diversify within the country, the capital controls that keep us from sending the money outside of the country, I actually think the opposite. I think that the ability to securitize and create new investment vehicles is going to be incredibly important. I don't think that it necessarily becomes a global investment product. I don't think it needs to be. I think China multiplies everything by 1.5 billion and it has a business of its own. The other aspect that I think will keep it from being global, at least in the short run, is that China has a very different view, I think, on what blockchain and how it will manifest. And part of that is cultural. I think we are going to see closed chains. We are going to see what we're calling hybrid chains, but really a mix of public-private chains whereby the regulatory bodies will be, in fact, engaged in the chains. We'll have private keys for the chains. We'll have freedoms with the chains that we wouldn't see in a fully decentralized situation. But again, I think in China, we view that as a plus.
Are those going to be national chains? Will there be a Chinese chain and a German chain and an American chain? Or what is it going to look like?
Well, I think that remains to be seen. But I think what we're seeing now is that the two-tier system that was announced in October is in fact a national chain that starts from the People's Bank. And in China, again, we view that as a plus. Imagine you are from a country with 3,000 years of history, only 40 of which has been a so-called democratic society. Imagine you're from a country where you trust your corporations and your local magistrates less than you trust the central government. And imagine you're in a country where already your privacy is less of a concern, if you will, than elsewhere in the world, where you choose the convenience of your DD knowing where you're supposed to go every weekday morning, rather than the privacy of having to sort of re-input your address, and that's something that Chinese live with and have lived with for many, many years. So there isn't this disdain for the so-called public private nature of the chains as there might be elsewhere. So I think that actually manifests itself as opportunity.
And of course, with the Chinese-owned banks, government-owned banks, you have a much, much stronger collaboration opportunity there. But I think, Radko, you mentioned earlier is that in the Western world, in Germany, for example, I think the collaboration with the financial institutions was very critical. Is that correct?
Yes, I believe so. And I think that this is one crucial aspect into the timing of what Andy described. I'm a bit more optimistic on the speed side, and the reason for that is I fully agree with the analysis that there's crypto investors and normally they want to see crypto-like returns. And then you have traditional investors who may not be so willing to touch new technologies because they need to change their processes. And especially for institutional investors, they would have to see huge efficiency gains and advantages into changing the investment process. However, crypto custody and custody of digital assets has become a regulated financial service from this year in Germany, and banks are now starting to provide custody services to institutional investors. And we're working on one particular transaction right now with one of the largest German debt issuers, which has only institutional investors. And the reason we believe this transaction will successfully happen is because there's a number of banks involved. They're going to place this asset with the same investors that they normally place assets with, and they are going to provide them with the infrastructure to hold these tokens. So to the investor, it feels as if they were investing into a conventional security. It doesn't really make a difference to them. The reason we're still using this new technology is because there is an efficiency gain for the issuer, which is normally the party that is paying for raising capital, and the bank is realizing a couple of savings because they're using a much more efficient infrastructure for that transaction. So the way we believe we can make it work is that we effectively don't change anything for the institutional investor, and there are a number of efficiency gains for the issuer and the arranger banks that are involved.
It sounds like the crypto community in general seems to be more on the short-term focus. I think with the bull run of the synthetics token over the last year, there seems to be definitely a lot of excitement. But is that too much hype? A little bit of investment advice for the people out there? Would you put your money into synthetics today?
Well, I'm not an investment advisor. I run a technology company. Of course, I have certain views, but I'm normally not sharing them publicly. I'm coming more from the traditional capital market side, where I believe that capital markets will function more efficiently with the use of blockchain technology, but I'm not the one who would put out investment advice, especially not publicly.
No one is listening to you.
But it definitely makes it interesting, doesn't it?
For sure.
Andy?
I would just respond to Charles's point, which I thought was very insightful about, I think it's a really important point actually that he made there, just to underscore it, that these technologies and these products do not have to be global phenomena to be successful. The flip side of that, though, is that if it is not a global product and if it is constrained to a small set or even a singular nation, you do ratchet up the risk at that point, right? Because one country in the world goes and bans Bitcoin. That's okay. There's a lot of other ones out there. Bitcoin's okay to use. But if it were a single country's phenomenon, if Bitcoin were only really happening in the United States and the U.S. said no more Bitcoin, that would be a problem for the asset. And so I certainly agree that even if it just happened in China, it would be enormous. I mean, bigger than the entire crypto space today by orders of magnitude. To me, there's still a question of, are you opening yourself up, and when I say yourself, I mean the security token industry, to risk by focusing on a single jurisdiction there? And particularly, I would argue, although you're the expert on the stage right now, that if one of the big benefits is being able to make investments that are ordinarily not possible because of capital controls, are you putting yourself at risk as an investor or an issuer for those products by in some way kind of working around those capital controls? And if that's the case, and if China takes a more aggressive stance on that, realizing that it's being used for some sort of evasion, whether benign or more intentional, then perhaps it could be a real problem for the industry.
Well, thanks for that. That's actually very important insight for everyone. I'll say only this. So we have one example, and it's only one, so it may not work. But there is one example, and that's Hong Kong-Shanghai Connect. So that's a connect between the Shanghai Stock Exchange and the Hong Kong Stock Exchange. And the way that they make that work is that it's a closed loop. So you're allowed to invest your money in Hong Kong. Your custodial bank will change that to Hong Kong dollar for you, and then will invest that money on your behalf. And then when you sell it, and it becomes your money again, but it can only come back to you. So you can't use, that money can't stay in Hong Kong. So once you sold the stock, it has to come back. So one possibility, and this is spitballing, of course, it's not happened yet, but let's say we work with a Singapore-based exchange, let's say, that allows people to invest now in a smorgasbord of assets, or allow Westerners to invest in Chinese assets, but it's a closed loop. So your money never actually comes into China. Some custodial bank does that for you. it's spit back out to you, including your returns on the back end. Again, that's totally spitballing. That's just a guess.
but I really-
But that is what we are using at Dusk actually.
Yeah.
So for our pre-IPO, like if I can't share about the companies which we're about to launch, but let's assume there's a company A which is about to go IPO. You're doing a pre-IPO security token. Then a Chinese national through Hong Kong who has sort of like this office can buy even like 2 shares before it goes up. And even students for that matter. Yeah.
So there's definitely not one size fits all, different jurisdictions, different assets. As an investor, we always have to look again, what's the underlying asset it is? And I can happy to ask a couple more questions because I really find this extremely valuable for me as an investor. Thank you so much. Good. With that, I think we're running out of time. I would like to thank this fantastic panel, Kavita, Charles, Radko, and Andy. Thank you so much for being here and helping us to understand why security tokens are the next big thing. Thank you very much. Oh, before I forget, moment, and you can't leave yet. You're going to get some chocolate too. There's chocolate for you, and chocolate for you, and chocolate for, no, not for everybody, sorry. Okay.